Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Pick segment. I am Jeremy Mullen, and Nina will be following me with her pick. But first, we're going to talk about Affirm, ticker symbol AFRM. The stock is a Zacks rank number 2 buy, and it's a financial service company that offers buy now, pay later solutions, allowing customers to make purchases, pay over time. Now, you might have seen Affirm's little button when you go to purchase something. What they'll do is if something costs $100, you buy that item and they'll let you pay over time, kind of like a credit card, but you can do it in installments and it's kind of more controlled. So this is a very popular technology that people have started to use over the last couple of years. And before the 2022 tech sell-off, this name IPO'd and was a high flyer, but the stock fell 95% from those 2021 highs. So the stock has returned from the dead as of late after a 68% EPS beat in late August. This has actually helped the stock double from its 2024 lows. So the question is, where do we go from here? Is there more momentum higher, or do we come back into the recent areas that it was trading in? Now, I want to dig into this one and let you guys know why I'm bullish. I like both the fundamentals and the technicals. So let's look at this. First thing we're going to look at is the profile page here. As you can see, we have the Zacks rank number 2. We have a style score of A in growth, B in momentum. Now we're F in value. So you value investors, you can ignore the rest of this video, because what we're going to do here is we're going to root for growth to grow into this market cap of $13.7 billion. This is a growth stock. They need to impress on earnings or the stock will not go higher. And we're going to talk about those earnings a little bit. But first, I have to stress, this is a very volatile stock. See this beta here, 3.5. That means it moves 3.5 times the average move of the market in every given day. So I want you guys, if you buy this stock, to be patient and wait for your spots, okay? A little bit more about the company. Affirm offers point-of-sale payment solutions, merchant commerce tools, and a consumer app. Its platform is supported by bank and capital market partnerships, and this allows those customers to pay over time. Okay, we're going to look at the next screen because I want to emphasize this recent earnings. This is the quarter here. It's a 69% EPS beat that we saw. This is the highest throughout the company's history. Even back here when it IPO'd, we saw a 52% EPS beat. And you can see it IPO'd, got some love at first, but then tanked and then rallied into the end of 2022 before the rest of the tech market sold off into in the end of 2021, before the rest of the tech sold off into 2022. And then it was just kind of left for dead, right? Just traded sideways around the $10 area before rallying into 2024, coming back before that recent earnings. So now what are analysts saying about this company? Before we get into that, we need to emphasize that the earnings, not only did the earnings beat, but the company raised Q1 and fiscal year 2025 revenue guidance. More importantly, their GMV, or gross merchandise volume, came in at $7.2 billion. This is up 31% from last year. So those numbers are something to watch as we go to the next quarter earnings. But what are analysts saying? Well, they're liking it. The raise-in numbers, estimate revisions are going higher across the board. They have a little hiccup here for next quarter. And look at the magnitude of things. You can see that reflected, 41 cents to negative 36 cents. But look at the rest of these. Current quarter, we have 15-cent improvement here. Current year, big improvement, right? Especially when you look 90 days ago, minus $1.61 to minus 82 cents. What I'm really excited about is we get positive perhaps in 2026. We're looking for, we see a move from negative 95 to positive 39. This is huge. This is catching eyeballs, and the analysts are loving this. We're seeing some upgrades on the stock. I also want to show this price and consensus chart because this kind of puts things in perspective. When the stock was up here in 2021, estimates were coming down and the stock eventually followed suit, right? So then estimates started coming up with a nice quarter here and the stock started rallying. Then we saw estimates coming down, stock gave everything back. But look what's happening. This 2026, this aggressive raise here, the stock has to catch up, right? Well, that's why I'm hopeful on the fundamental side. Now let's look at the chart and see how that might work out. Okay, this is a chart going back to the IPO. You can see up, down, up to highs, 176, and just a horrible bleed down to 862 was the low. So we started to crawl higher here into the end of the year, and this is a really nice move. We gave a lot of it back. And here we are back under those 2024 highs, and the market's trying to decide if they want to take them out. Let's zoom in to the daily chart and see how we can take this high out. That's what we want as bulls. First, let's look at the moving average. 200-day moving average, we're above it. 21-day moving average is moved above the 200-day. I like to see that. That means momentum is in the bulls' favor. Then we have the 50-day. Okay, the 50-day gets over that 200-day. That's called the golden cross. A lot of eyeballs will come to this stock. Short term, what's the setup? Well, Counter-Strike bought this move. All we did is drew a Fibonacci retracement from these lows to that highs. We got to retrace into the 61.8, 200-day right there to defend. Boom, right back to the post-earnings highs. I'm looking for 48 on the shorter term. Let's get rid of this. We could also draw an extension from these highs to lows. No resistance at this 61.8. That means I'm targeting here at this extension here, perhaps up here at this next extension. Really exciting because we have multiple targets above, which are right at that 2024 high. I like it there, in the next month or so. Looking longer term, let's say into the end of the year, if the company can impress on earnings again, we are going to target this extension that is found by drawing the 2024 or 2023 highs, two lows, and to get up here to this $70 level is the 161.8 extension. So technically, a lot of bullish targets above, short term, longer term. Like I said, we probably have to beat earnings and press again to get up here, take out these highs, and go to this level. But I think we can do this into the end of the year, perhaps early next year. So that is my pick of the day. Affirm, ticker symbol AFRM. It's a Zacks rank number 2. Remember, very volatile stock. So be patient and pick your stocks with this one. And that's it for Affirm. Here is Nina with her pick.
Thanks, Jeremy. I'm Nina Mishra, and my top pick today is Eli Lilly, ticker symbol LLY. And two dominant investing themes lately have been AI and GLP-1 drugs. And whereas there's a lot of excitement around NVIDIA and other AI-related stocks, shares of the two companies that lead this GLP-1 revolution or the weight loss drugs revolution have also been surging. So let me share my screen and start with the investment case. So these GLP-1 medications, they have become like miracle drugs. And the main reason is that over 1 billion individuals worldwide are reported to be obese. And this figure is expected to impact half the population by 2035. And obesity is linked to a number of diseases, heart diseases, diabetes, stroke, cancer. So GLP-1 drugs, these medications, they mimic the effects of naturally occurring hormone GLP-1, which is produced in the intestine after eating. So initially, these drugs were used to treat diabetes, and they were later found to control blood sugar, reduce appetite, and promote weight loss. And then later results also showed that these drugs can also the slow progression of Parkinson's disease, reduce the severity of sleep apnea, and latest studies also show that they can also reduce the risk of heart attacks and stroke. So that is why they are called miracle drugs. And according to Goldman Sachs, the market for these drugs could soar to $130 billion by 2030. And two companies I mentioned, Eli Lilly and Novo Nordisk, they control the market. It's a duopoly, and according to Goldman Sachs, they will continue to control the market, 80% of the market share by 2030. So GLP-1 drugs for Eli Lilly These are Monzero and Zepbound, and these have been key top line drivers lately. So it's currently a Zacks rank number strong by stock, reported very strong results recently and also raised guidance. So let's take a look at the code page for Eli Lilly. As I mentioned, it's a Zacks rank number one strong by stock. Value doesn't look very good. BGM score also F, so style score don't look very exciting. But if you look at the estimates, as I mentioned, it reported exceptionally strong results. So you will see that analyst estimates have been going up significantly for the current quarter and next quarter, current year, next year after those results. And you see these amazing growth numbers for the company, which makes it very exciting. Now let's go back to the slide 1 second. So yes, lately, Eli Lilly has been gaining in this obesity race over Novo Nordisk because Novo really reported disappointed results recently, whereas Lilly reported very strong results. And the main concern for these two companies is that the demand is so strong, so they have to boost supply. And Lilly has been working on boosting supply. And in fact, recently it announced that it will begin offering its weight loss drug Zepbound in vials. And that is mainly to boost supply, and that would be at half the price for of the original for certain doses. And producing vials is much easier, so that could boost supply. They have been taking other measures also to boost supply, and that is why they appear to be gaining in this race over Novo. Shares are not cheap. They are up 56% year to date. So let's go back to the code page, and before we take a look at the valuation, I just wanted to show this price consensus and EPS price chart. So it was like meh earlier, but since that's GLP-1 drugs have started working, you see those amazing big surprises and the surge in price. Now, going back to the valuation, so shares are not cheap. They are up over 50% year to date and currently trading at a forward P multiple of 56x. Now, in the past, the stock has traded as high as 93.2x forward estimates. So it's still reasonably valued compared to some historical valuations, and also it's significantly off its 52-week, its recent record high. So because of those reasons, I think shares are worth a look in this amazing market for GLP-1 drugs, and the company is a leader in this market. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with some more interesting topics.